What is up, everybody? This is your boy B Nice FMP, also known as the Printer Poppy. Today, I'm going to be going over my RTP PO3 system that you can trade futures overnight with. A little bit about this system. There's no fluff. It's a very simple, straightforward system. I did not create the system, however, I made it better. With that being said, I want to kind of show you guys how the indicator that I created for this works and what we're looking for and how you can get this to work for you. Okay, this indicator hones in on two time periods that are happening before the New York open session. Okay, so we have two specific time windows where we are looking for trades, and we have our London submission and then our New York submission. Okay, under the London submission, we are looking for an hourly range between 1:12 to 2:12 a.m. New York Eastern Standard Time. Okay, so all we're doing is we're waiting for that range to create itself. Okay, after that range is created, we're looking for it to make a swing high or a swing low. And once we do that, we're waiting for a retracement. Once we get that retracement, we are targeting the opposing liquidity, which means whatever side that we swept, we're looking for a price to go back to the opposite side. Okay. And same thing for the New York submission. Okay. The only thing different about the New York submission is we're looking for a range between 8:12 a.m. to 9:12 a.m. Eastern time. We're waiting on it to create a swing high or a swing low. And then from there, we are going to target the opposite liquidity. So if we take out the low of that 8 a.m., that 8:12 to 9:12 session, we are expecting price to sweep and go to the high. Okay. So that's it. Let me jump into some chart examples for you guys. Right now we're on NQ, and this is under the London session. Okay, so we have 8:12, and then sorry, not 8:12. We have 1:12 to 2:12 right here, right? So this is the range that we created, and then this is our 50% level. Okay, so for this specific range right here, we can see we put in a high, we put in our low, and right now currently price is trading towards that low. So what we can expect is if price does take out this low right here, we could be looking for some type of reversal signal that will allow for us to take a long back up to this high right here, right? So let's see what happens. So we sweep the low. Once we sweep that low, we can see that the indicator is now in a state of arming. Okay, so it's arming for us to be looking for a trade. However, we do not have a trade idea just yet. The thing that sets the strategy apart for me and how other people use this is that I incorporated some Fibonacci sequences to it. So whenever we retrace a specific range of those Fibonacci retracements, then we get a trade idea. Okay, so we're not going to get a premature trade idea. We're going to get one that should be pretty reliable for us. Okay, so obviously we're not arming yet, so we didn't get a percentage retracement that we would have liked. And also this sweep on liquidity is pretty low, so it's not the best sweep right here. So ideally we want to see like a deep sweep before we look for that retracement. Okay, so we're just going to keep going, and we're still making lows, and then we make another low with displacement, and then this is starting to get interesting here, right? So we see that we created a fair value gap. If you trade fair value gap principles, you know that if we were to inverse this fair value gap, there is an opportunity for us to trade. We also created fair value gaps right here too. So we have a double fair value gap, and now we have somewhat of a reversal signal right here on this candle. So if this sequence right here started to retrace the way that we would like it to retrace, then we'll get a trade idea. Okay, and as you can see, we are definitely retracing. So I think once we inverse this is giving us an opportunity to be able to see it. But the way that I have the indicator programmed, it's not going to trigger until we retrace a specific amount. And as you can see, if we would have went in there, we would have sat into some drawdown. But however, we are pulling back into a fair value gap. Let's see what happens after that. And then boom, here we go. So now we have our entry signal right here, right? And we have a pretty decent range that we could trade with. So if we were to trade this, we would go long. we have our entry. Our entry isn't perfect because this is replay, so we can't necessarily nail it on the money. But let's say we were in an eval and we just really wanted to get our get our coin for our eval, right? We could get into this trade and we could target TP1 here. We don't have to necessarily target the full high of the range, but we can anticipate that it will target that full high of that range, right? So we can go here, we'll go here, and then we'll actually put a sell order here. So let's just say we want to sell one we want to sell one there. Uh, we'll sell one here. Okay. So we are in the trade and we'll put our stop. Our stop will go down below this low right here and we will take the trade. And as you can see, we are moving up. We are $1,900 in profit. Boom. TP1 hit. And now we're on our way to TP2. And then TP2 was hit. And literally that's it. So the way that this indicator works is we took out that low, we created the low, and then we started to have the retracement. I have it set to a specific percentage of a retracement. Once we get to that retracement percentage, we get a trade idea. That trade idea populated, and we were able to collect our dividends on that, right? And there is a limit to where we will get our trades. Typically, the best trades for this come anywhere between 3 a.m. and 3:30 a.m. So it's a time-based trade. As you can see, this trade started to play itself out around 3:30. Once 3:30 a.m. hit, that's when we started to get our reversal, our time-based reversal, and we were able to hit full TP on that. If you were to keep both, you would have made about $7,000 potentially on two NQ contracts. And as you can see, we were on the sell side of the sell side. The sell side of the curve, and then we ended up going into the buy side of the curve. So once we took out that liquidity, we got our reversal and it worked out. All right, so let's go into the New York example if we can. Oh, and by the way, so it will give you an opportunity to short this after we take out that high liquidity. A lot of the times when we get like such a deep reversal like this and we do this, all this will be a pullback. So ideally, you wouldn't try to target TP2 on this. You would really try to target TP1 if you even want to take that trade. But honestly, if you're trading on a prop firm, this move right here was all you needed. You don't need to get greedy and try to get back in and make more money or anything like that. I highly suggest if you can just take one trade and that one trade wins for you, that's all you need. That's all you need. Okay. So going into the New York session, we can see that we are creating our range. And there we go. So for New York session here, we have our pre-New York high, our pre-New York low. And again, remember I told you guys that our New York session starts at 8:12 a.m. and then it ends at 9:12 a.m. Okay. So this is our range, our high and our low. All right. So what are we going to do? As you can see, we are starting to move our way down. All right. So here's the thing about the New York session now. So during the New York session, we have multiple levels of liquidity that we could potentially target. Okay, not only do we have this New York PO3 range, we also have our London low or our pre-market low. I put these two together because to me they are the same exact thing. Okay, so pre-market low and London low, they are the same because they are pre-market low is the low of London. Okay. So with me knowing that we still have this liquidity to the downside, I'm not going to be trying to size heavy on just a minor sweep of this New York low right here because I know that there is still a potential for us to go down and take that pre-market low, right? So this is an instance where this trade could potentially fail if we were to go into this, right? So let's just kind of see how this plays out. As you can see, we got our trade idea here, and more than likely, what's going to happen is we're going to take out TP1. Boom, we hit TP1 and then immediately had a reversal down towards pre-market low, right? Because this is still unswept liquidity. As you can see, we were in a downtrend. This was just a pullback to go lower. However, we swept that liquidity from that hour block. We went up to TP1. If you were being risky, you could have taken that trade. However, you would have needed to put your stops at break even. Now, what I am expecting here now is that I know that we were in an uptrend the other day. We were in an uptrend here. We reversed all the way back down. And now what could potentially happen is we could take this London liquidity. We already took out the Asia liquidity. So all that we have left is London low liquidity here, right? We have the London low liquidity, and then we still have this liquidity up to the top. So what's likely to happen is we take out the London liquidity and then target the London high liquidity. All right. So let's see what happens. We would have hit TP1 on this trade and we would have got stopped out, or you could have just waited for this pre-market low to get swept. Once we do that, now we got a trade idea. So we swept the pre-market low. We get a little raindrop here that shows that liquidity was taken here, and then what we're going to do is we can put in a buy order here. Let's see. Let's see. We'll buy. So we'll buy two, or we'll buy two since we're pretending like we're on a 50K, right? So we'll buy two here, and then we'll just target this upside liquidity right here. And sometimes you don't have to target the high of the range, but like let's say this trade plays out, that's a $10,000 trade that you'll get. So let's see what happens. Boom, just like that. We take out that high, and we're good. And then let's see. For shits and giggles, let's see what else happens here. All right, Oh, so we ran out of. We hit our TP2. We swept that pre-market high. We pull back in. Now there is, if this was in a specific time window, this would have triggered a short idea. But the way that I have this indicator created is that we are only looking for trades within a specific time period. Anything after 10:30, 10:15, we're not going to try to take a trade after that because this strategy no longer works after that. So once 10:30 hits, we're done. If you're just trading NQ, this is all that you needed right here. That's a $10,000 trade with two minis, and you would have made enough money for your payout, and you would have been good. And that's all you would have needed right there. And that's the RTP strategy. It works on everything. It works on ES. It works on options. It works on YM. It works on everything. And all you got to do is find the one that has the best setup and then trade it, and you'll be fine. So yeah, that's the system. That's the strategy for the RTP system. If you guys have any questions, by all means, you can reach out to me via Instagram, TikTok, Discord, whatever, Twitter. All of my socials are at the top of the video. So yeah, thank you guys so much for listening. If you guys want to join the Discord community, the link to join the Discord community is right here at the bottom. Also, if you guys trade on prop firms, you can use Tradeify. Use code FNP at checkout for 30 to 40% off of all evaluation accounts. So thank you guys for listening. I hope you guys have a blessed day.